Hey everyone, Tom here. Today we're going to be talking about day trading in the markets. More importantly, the way we set up day trades, the way we manage day trades, and the things that you want to be looking out for. We'll also be talking about the result and how that worked out for us. So if that's something that interests you, stay tuned. Firstly, I'd like to begin by just showing you a video of what I was talking about this week to our Discord community. It's a video I made talking about this specific pair being the pound CAD and the process that's involved in the analysis in terms of working out a take profit area and working out a key zone that we're going to target for that week. Last one that I'll leave you with on Monday is pound CAD. I don't often bring this one up, but we have a 2050 cross about to happen or happening on the pound CAD. On top of that, we also have a key resistance of 171.80. That level is coming under pressure right now. It will move above the 200 simple moving average on the daily as well. I think this is a very key level. You'll want to be doing some cross analysis on this one. Cross analysis, the pound, US dollar, and US dollar CAD, and cover all of that together. But basically, if it gets past this resistance zone, I would expect then for the market to come back down, and this will be a very key, pretty strong level. It's been previous support, it's been previous resistance in the recent times, and you'll have the 200 simple moving average and even the 20 and the 50 all acting as dynamic support, and that's what we like to do in terms of course trades and things like that. Where to for the pound CAD? I think, look, there's a couple of different ways you could be looking at it. One, you could look at it as like a really bad kind of inverse head and shoulders where the right shoulder's here, the left shoulder's pretty deep, and then the head. And I think that would be a fair analysis. So we'll take from the distance down here up. Does that make sense to a previous resistance or support level? It certainly does. Here's the previous resistance across the top here. So there could be a bit in the pound CAD. Zones to watch would be also this area here. So pound CAD one to watch. Definitely worthwhile putting on your alert list, and I wish everybody the best of luck this week, and we'll see you in the Discord community later on. Okay, so in that video, we were discussing several key reasons that we want to be in the trade. One of those was the resistance, and this is now the 4-hour chart. So on the 4-hour chart, the resistance is still very clear. We were on a daily before doing our synopsis. Whenever you're swing trading, the daily is going to be the most important time frame to be on, and that's very, very important to always have that in the back of your mind. When the big traders are trading, they really are using the daily the most, and then of course every other time frame around that in forex trading is important, but it's not as important as those daily closes. So here we have the resistances that we formed above that zone, and most importantly, there's 3 major touches to this resistance point. Whenever we see 3 major touches, that's significant because it means that if the market is going to break up above and come back down, which is what I talked about in that video, that means that it has broken a significant resistance, and these 3 touches are more likely to act as dynamic support. If that's to occur, then it means we've got more ability to just basically buy the order at this level once that has happened. Another couple of things I want to just talk about with this trade. Remember I mentioned in that video, I talked about it being kind of an ugly inverse head and shoulders. So here we have the left shoulder. Here we have, let's call it the double-headed dragon kind of head. And of course, we've got the right shoulder. And the most important part of all of this is the neckline is very clear to everybody, being a horizontal neckline. So a couple of things about this one. When we have left shoulders being lower points than the right shoulder, that's important because it shows that the market is really looking to buy and looking to move in the direction. If we don't have the market pressuring down to this point, it signifies that people kind of have that FOMO effect. They're interested in getting in and they see clear value here. Another thing I want to mention is we have clear resistance across here off the head, because the head's basically a double bottom here on the time frame of the 4-hour. And this signified, again, role reversal where the resistance became support. Some people might say, well, is this a good buy zone? It's not bad, but again, it's all about probability, and technical analysis is about finding the best possible positions and the best risk to reward ratios for your position. So there's a few things that I like about this particular trade coming into it. I also like the fact that it's making a series of higher lows. So we've got a low here, we've got a higher low here, and obviously we're getting kind of equal highs up above here at this resistance that we're looking at breaking. So what happens next? Let's take a look. Okay, so now we're putting pressure on this 170, 175 zone. You can see that the market is putting pressure on this area. There's nothing for us yet. What happens here though is very important. So again, we do have a wick on the 4 hour that gets out above. We noticed on the daily, it was pretty clear. On the 4 hour, it's less clear. And we need to make sure that the market gets above and really breaks that level significantly and appropriately. When we get this particular candle here, what this is signifying is that the market has come up to this level, rejected it, and this is kind of like a little bit of a trap. So this particular candle here, some people might say, oh, it's a shooting star and it was a good sell level. I'm not so much of a fan of selling at this point, mostly because where is our take profit going to be? If we're selling here, we might involve a huge amount of buying pressure here. Firstly, we have that series of higher lows. So we've got that higher low and that higher low over here. We also have a nice little resistance here underneath. So if the market was to sell off here, our risk reward, as in we'd have to place our stop loss at least above here to reward, would not be that high. So it's not really going to be worthwhile for us to take that particular trade. But what I do want to mention that this particular candle, if the market breaks above that, what's it doing? Any short seller on the smaller time frames is getting their stop loss hit. They're also going to be doing the cardinal sin of moving their stop loss against the position. I'm sure everybody's done that at some point. I know I have, obviously, during my trading journey. It's something that unfortunately is built into human psychology. So people will be not taking their stop losses above this zone, and what they'll be doing is slowly moving them back and unfortunately losing their positions. So let's see what happens next and when this trade actually triggers for us to be looking at it. We should also, of course, have an alert above this zone in TradingView or our trading platform to discuss the point. So here we have the clear break. We've got a clear close above, and we are seeing a rejection here on the 4 hour. But at this point, we are comfortable enough that this triple resistance is going to act as support. Remember also, we have on the daily time frame a 200 simple moving average that we discussed before, and a 20 and a 50 behind that point. Another thing I'd like to do at these levels is generally I'll be drawing things like fib retracements on the last move. And the reason I do that is because if it does come off this zone, what is that going to tell us about the market? Well, maybe there's going to be a 38.2 fib sitting at this resistance. That then will also act as some form of support for our trade. So basically, if the trade's coming back down to this level, because we're taking that conservative entry and not taking the close above, because I want to take the conservative entry, it's more likely to be the good area. We don't want it to technically come any lower. So will the 38.2 fib be also helping our stop loss? We'll talk about that in a second. So we'll leave this here and we'll see what happens next. So the market obviously starts to pull back, which is important. Starts to come down fairly aggressively, which is good, and it hits the zone that we want to be buying it at. So this 171 kind of 81 zone, this is our key zone. We should be having an alert. We know that this is the fib now. Is it hitting the 38.2? No, it's between the 23.6 and the 38.2. In Forex trading, really, the 38.2 and the 50 fib should be your best friends. They're the most likely ones to find that support that's going to hold your trade in. So we can then basically place our position long and then play it out. Now, where are we going to be placing our stop loss? Well, initially we have a few different choices. One, we know that there's a huge amount of resistance over here, and we know that there's a 20 moving average as well, and we know there's that 200 simple moving average on the daily. So what I would do is I'd be placing my stop loss underneath these levels, probably underneath the 50 fib, as this trade has a lot in it. Remember, where does this trade go after it closes? It goes the distance of from the head to the neckline. That's our projection. We talked about that in the video, and there's a lot of profit considering the stop here. So this is something that we can then place in. Now I chose to take about $500 of risk on this particular trade in terms of I placed the stop loss nice down here, and I had some set take profits that we'll talk about, and we'll go through why I ended up taking the lower take profit than the higher one. So the market's come down, it's triggered this position. Now, a lot of people would be getting scared here based on this particular candle rejecting in. If you are scared of this type of position, there are two ways to take it. One, You buy it because of the triple touch, and then you just say, okay, there's enough support behind that I'm comfortable with the trade. Or 2, you wait for an engulfing candle, you wait for a change of trend on the smaller time frames or something like that. That's the way I would play it out. So let's see how the market interacted with this zone. So the market pretty much bounced straight away, and then it closed as an engulfing candle against the support. So that's awesome because this still is a buying opportunity. You've waited for the market to come back down here. It's proven that this level means something. We know our take profit is very large. And the benefit for waiting for this kind of thing is effectively what you can now do is you can say, well, we could place our stop loss underneath the lows down here. Probably want to put it still under this zone just because there's so much resistance that's going to act as support. And we can then have a very large take profit for the stop loss. It's not always going to be like this, but this is the power of taking the conservative entries. If you're taking the aggressive breakout, what you're going to have to do is probably put your stop loss underneath the last swing, because often the aggressive breakout can come back down and then really hit you around. So by waiting for that further confirmation, that is absolutely perfect. I like to take that straight away whenever I see a first touch of a 1, 2, 3 or a 1, 2, 4 kind of resistance break, but that comes down to your personal preference and the way you want to deal with the trade. So at this point, once we get the engulf, you can actually pretty much move your stop loss up. I still left it underneath this zone here, and I did that because I still am not 100% confident that this trade is going long until we break to a new high. So let's see what happened next on this trade. So we can see it tested the high and found resistance. That's pretty normal. In terms of psychology on the market at this point, at the 172.64, when you're trading this particular market and you see this rejection, especially something like this would again break your psychology to a degree. You would think it's rejecting and you would potentially take your order early and say, oh, why didn't I take profit up here? You've got to have a lot of confidence in your trades and in your stop losses. So in this case, I always recommend actually that if you've placed a stop loss, you've placed a take profit, and you've placed like all of your kind of trade plan, and you've planned it beforehand, you can then literally just set alerts for new high being made, maybe stop loss getting hit, and potentially maybe 65% of what you expect. And then you come back to the trade only if those alerts are going off. There's no point in knowing what's going on in between, because you need to leave your trades to run, because otherwise you won't have the risk reward over the long term. So what happens next? We get that nice big breakout above, and that's great to see. At this point, obviously we wouldn't be wanting to have this Fibonacci on here anymore, and we'd be looking for our take profit levels. So when we zoom this trade out, and we talk about our take profit levels, there's a few different ones that I set up in the video. The first one was around this 174 kind of 85 zone. And the reason I say that is because this zone here acted as resistance a lot. I also know there's a lot of news ahead this week in terms of the Fed, in terms of Congress, all of those things. And they do play a little bit into the trade. It's probably going to go in my favor because I'm trading with the trend. But at the same time, the uncertainty of all of that, uncertainty of earnings, even in the stock markets, all of these things right now affect the currency markets as well. So we've hit our resistance up here, the first one coming off these previous supports over here on the left-hand side. And really, it's all good right now. We can leave the trade and pretty much set alerts for something like this 174.20 zone, and then come back in and have a look at what's happening next. Another thing that we can do is once we make the new high, we can move our stop loss behind the low, and we don't want to do that by just a few pips. We want to do that by a percentage. So we generally take the percentage move from here down to here and then move our stop loss behind, and that will give us this 20 moving average, the 200 moving average on the daily, all of those things. But we've made the new high, so that is triggered that we can move the stop loss up if we choose to do so. So what happens next? We'll have a look at that together now in the markets. Basically, the market continues to move forward. It's a pretty aggressive trend. I'd actually expect it to come usually back down to this zone, or at least this resistance, find support. It did so. That's actually a re-entry on the small time frame if you missed out on this trade. We made a new high, nice technical hammer up here. It's not going to mean enough though. We need to see closes above this zone to feel very confident about it. So the market then boosts up heavily. We'd be setting our alerts, and the next candle pretty much takes us home to the first take profit. Now, this point, things change a little bit, and I'm going to let this play out and just show you how fast and aggressively this trade actually moved up to the full resistance zone. So it continued to move incredibly bullishly, and then of course it hit the full resistance coming into the end of the week and started rejecting. So notice how up here at the wicks, and then it starts rejecting down. So why is that important? Well, it's important because notice how it didn't quite get to the top. So if you were super greedy and you were looking at these full wicks up here for whatever reason, that didn't happen. It also went in terms of what I think happened, and that is that there's an excess in the market. So if we took this head and shoulders and we actually extrapolated it out, technically it should only have gone to this level. The market likes at the moment to go over in excess of what it's meant to be doing. So it went all the way up here to the resistances. But you should never be sad to not get your profits in at the other levels. So how do we play this? I'll talk to you about this right now. So here's the entry and here's the take profit zone. Here is the full kind of length of what we expected. This is in the MetaTrader 5 platform, but you can see the entry ended up being perfect. Now it's not always going to be like this, but this is the daily where we did that analysis, where we did the touch zones and we knew that this was a key level. Remember I highlighted those moving averages. I love this kind of setup, a 2050 cross coming into the break candle, a 200 simple moving average, all dynamic supports here, and of course a perfect entry in this case. But what you want to do is usually draw a zone, and that zone between the wicks and the bodies will be your area where you'll be setting your triggers for the long take. Now, some people will say, well, you're an idiot, Tom. Why didn't you take the profit all the way at the top? So the reason I didn't do that is because of the day that we actually ended up getting out of the trade. So have a look over here and have a look at the day that we got out. So in this case, it was the 30th of July. So if we have a look here, the 30th of July was Thursday. So there was a lot of news coming out. There was obviously a huge amount of earnings in the stock market. And while we're trading the pound CAD, everything can have its effect. And of course, Congress, the Fed, all of these types of things. I didn't want to gamble with my money at this point. So we entered the 0.5. The reason why I chose a 0.5 is firstly, I didn't want to risk too much money. I want to make this series, if everyone enjoys it, more about what I think most people can afford to potentially put in the markets. Now, whether this is a 0.1, a 0.5, or 10 contracts, it's really just more about the process involved in taking it. So what I did was I basically said, okay, near enough is good enough in terms of my first take profit level was around this 174.60 to 80 zone. I was happy with where it was here. I took the profit and I do not regret taking that profit, even though it went onto the full thing. That was a decision I made based on the current events in the market. You could have easily left on a portion as well. So you could have basically said, I'm going to leave on a quarter of my position, take out 3/4 of my position, and let it ride and run to the full take profit zone. And that is a very valid strategy. And I actually kind of did it this way to discuss that there are multiple ways of managing an order such as this. So hopefully this helps everybody. I'll quickly just put up how much this ended up making for the trade. I think it was about $1,200-ish. It cost about $10 in swap. And remember, swap is a real cost when it comes to trading the markets. Effectively, it's your daily cost of trading Forex. And in terms of the brokerage in this account, it was a no commission brokerage. So effectively, you were paying more in the actual spread than anything else. Hopefully this helps everybody today. If it did, please make sure to subscribe and of course like the video and comment down below if you want to see more videos like this, because I'm happy to do them and I think it really is cool to see the process that goes into the trade and more importantly what the result is. And I want to show some wins and some losses, because even if you're the best trader in the world, you will be taking some inevitable losses sometimes, and you need to just be able to say, could I make it better or is it going to become worse? Thanks very much. Bye.